Chevron and Exxon posting record profits driven by higher oil prices during the most recent quarter. Net income tripling from a year ago after oil prices nearly doubled. Today, we're looking at crude just under $100 a barrel. Let's talk about what this means going forward. We have Rob Thummel. He is Tortoise portfolio manager. Rob, certainly a strong quarter here from both Exxon and Chevron. Record profits from both of those companies. Over the last couple of weeks, though, we have seen crude back below $100 a barrel. How does this set us up for the second half of the year?
Yeah, well, it sets up for the whole energy sector really a lot of cash flow, right? So Exxon and Chevron are up like a lot of the energy sector this year relative to the S&P 500. Why? Well, because the sector generates a lot of cash, a lot of free cash that they can then distribute to shareholders in the form of dividends, debt reductions, and stock buybacks. And so much of the same is going to happen in the second half of the year that's happened in the first half of the year. So that's why we're really bullish on the energy sector, really for the rest of this year and quite honestly into the near future.
I want to ask you about a bit of a surprise in the legislation that just ran through D.C. It was about climate. It was called the Deficit and Inflation Reduction Act, but in it, a surprise boost for the oil and gas sector. Tell us about that.
Yeah, I think this is really big. So I think politicians have really started to figure out, Dave, that, to get this climate solved, get this climate challenge solved, to decarbonize the world, we need an all of the above approach. So we need more wind, we need more solar, but we also need more natural gas. And we actually need more U.S. natural gas to help decarbonize the rest of the world. And so included in this particular act is a provision that will boost oil and gas production in the future. And then there's I guess a side agreement or a separate agreement that's going to happen at some point in time that will improve the permitting for exports of natural gas, and as well as more pipelines that we're going to need to transport more natural gas into the future. So all of this, I think, is really eye-opening for everybody and should be really encouraging to everybody who's concerned about U.S. energy, U.S. as a superpower, because it alleviates a lot of those concerns because the U.S. now will be able to produce more energy. It will be able to produce less carbon, but not only domestically, but globally as well, while maintaining energy security, which is really important.
And Rob, we know all of this tends to get lumped together, but talk about how far the U.S. is when it comes to natural gas versus, say, traditional oil and gas as well.
Yeah, this is a really important point. So the U.S. is one of the few nations in the world that is actually energy independent when it relates to natural gas. So what does that mean? What it means is that the U.S. actually produces more natural gas than it consumes. So about 15% more natural gas is produced every day than is consumed. That excess then allows the U.S. to export that excess around the world. So if you think about what's happened, from a decarbonization perspective, U.S. carbon emissions have declined since 2015 by double digits. A lot of that is because of increased use of natural gas. Europe emissions have declined in the last probably 10 years because of increased use of natural gas. This same thing can happen in Asia. The same thing can happen in India if those two countries decide and elect to import more natural gas from the U.S. So it's a real advantage globally to be energy independent and to actually have excess of a supply of something. And in this case, the U.S. has it in the form of natural gas.
Rob, in terms of some of the larger companies that did report today, Exxon and Chevron certainly have had a strong start to the year, strong first half of the year, I should say. We're entering a different period, though. Economic slowdown, rising risk of recession. There's debate, of course, out there about whether or not we are currently in a recession. How much of this do you think has been priced in already to some of these larger energy players and really the energy sector at large?
Yeah, so that's a good question. So I think in general, the energy sector is pretty essential, right? So it's one of the last things to experience declines in demand. So demand for energy is fairly inelastic, is what I'm trying to say in relation to that. And so where I think we are right now is energy demand has gone up 28 out of the last 30 years globally. We really can think that energy demand will continue to rise, and we can have an economic slowdown. And that's fine. You're going to still need energy demand. And globally, you still got China and Asia really in lockdown. So that demand has really come down. So when that picks back up, I think we have a bigger risk of continuing to have an undersupplied energy market globally rather than an oversupplied market globally. And what that means is then we might see oil prices and natural gas prices continue to rise here in the U.S. as well.
Rob, quickly, is specifically related to Europe and Nord Stream now cutting back to 20% flows to Europe. How severe is that energy crisis about to get?
Yeah, it's really significant, and obviously everybody's taking it very seriously. I'm sure you're reporting on it. So if you think about where we are today, obviously the concern is in the winter, right? Because in Europe today they've got plenty of natural gas to serve their daily needs, but in the winter that flips, and they don't have enough natural gas every day. So you've got to find new sources of natural gas. Historically, where's that come from? Well, it's come from Russia. This year, maybe a little bit it'll come from Russia, maybe none will come from Russia. So Europe is preparing and bracing by increasing their inventories to the highest levels that they can get to, so they can prepare for a winter where they're not able to get a Russian supply. And so that's where they are right now. You can see it reflected in the natural gas price in Europe. European natural gas prices are 6 times higher than in their U.S. That's phenomenal. They're over $50 MCF. I mean, in the U.S. they're at 9. You know, last year we were probably in the 3s and 4s in the U.S. to give you context. It's in a massive price, and it's really a massive problem that Europe will have this winter. But I'm glad they're preparing now, and I hope there's a scenario where they don't run out of natural gas this winter, because it would be devastating globally, as well as obviously to all of the people who live across continental Europe.
Yeah, sure would indeed. We will be watching. Rob Thummel, appreciate you being here. Thank you. Have a great weekend.